we have seen a strong recovery in the last year. Our total patronage has exceeded 1.8 billion last year, which is back to the same level as pre-pandemic. So in terms of recurrent business, we are happy to see the recovery, and the trend is actually improving. And as you said, our high-speed rail business has broken another annual record of serving more than 20 million passengers last year. So in terms of our recurrent business, we see a strong recovery, and the trend is promising. In terms of the property development profit, we are not a developer. We work with developers on property projects. So given the relaxation of government's control measures on the property market, we see some movement, but our property development profit does fluctuate year by year.
You have global reach and you operate rail lines from Beijing to London, Stockholm and Sydney. How are they performing, Jacob?
They vary. Our businesses in the mainland have seen a similar type of recovery in patronage. However, international businesses vary in performance. But if we look at our profit contribution, our core business is still in Hong Kong. And if we combine the mainland and Hong Kong profit contribution, that makes up more than 90% of our total annual profit.
I have a sort of an investor type question for you. Biggest single shareholder in MTR is the Hong Kong government, right? 75%. When they take a look at some of your stock metrics, and I'm thinking just here of a simple PE ratio, right, which is the most common one that most investors use, you're trading at about 19 times when about half the stocks in Hong Kong are trading at 8. A lot of companies are trading at below 4 times. When you have conversations with government leaders, right, do you get questions like, Jacob, look, why is MTR trading at 17 times? Why is it so expensive? Does it mean that investors, including the Hong Kong government, are confident that you, as CEO, are going to be able to turn things around, turn business around at MTR? Because otherwise, the government is paying, or investors are paying a hefty price for no particular reason.
Thank you. This is a very insightful question. If we look at MTR's business, we are really a railway business, and the profit contribution mainly comes from the recurrent business, which made up of the rail transport, the station, what we call station commercial, and also the recurrent property business like shopping malls, offices that we rent out. And these are, in normal years, apart from the pandemic years, in normal years, these are very strong recurrent business, and they provide recurrent profits. And in fact, we have seen, although I cannot predict how profit will grow, but we have seen a healthy trend in this recurrent business. We still have room to grow. And with the new railways that we are building, our recurrent business will continue to grow.